and then we have more people joining.
Sure, absolutely. Hi, everyone. I will be, first of all, thank you for coming. Thank you for being with us. It's not the best of situations anywhere we are, whether we're in Lebanon, whether in Dubai, across the GCC. We're all hoping for better times, and we're looking forward actually to the end of this crisis so that we can go back to our initial plans of scaling, of growing, of creating impact, and achieving the ambitions that we all have. Maybe a few words about me before on this call from CS Touch, we have Maria Daher, our project coordinator, Constantin Salame, who's our founding partner and founder and managing partner, and myself, Lama Makarem, as the lead advisor. The topic today, very nice to see all of you and to have all of you here. The group is quite diverse. So I've taken a quick look at your profile. So we're looking at organizations that have just started or are looking to start generating revenues, going to market, and we're looking at organizations that have been established, are generating recurring revenues, and are scaling nicely. We'll try to tailor this session so that you can all benefit in one way or another from the different messages that we'd like to pass on. We do have 1 hour together, so the time is a bit limited to really cover crisis management as we would like to cover it. So we have made a selection of topics within the crisis management framework that we usually follow that we would like to share with you. Maybe let me share my screen. Maybe just an overview of who we are at CS Touch Advisors. We are a boutique advisory company based in Switzerland. Our work covers the MENA region, East and West Africa as well. What we do can be summarized along 3 pillars. One is that we co-manage, co-design, and provide capacity building through donor-funded programs. So we're managing a number of programs currently with other partners where we provide capacity building through workshops, through one-on-one coaching sessions on topics related to strategic direction, strategic planning, financial planning, going through investment readiness, fundraising, transformation plan, and we do it with different types of organizations. From NGOs to startups to scale-ups, SMEs, and we provide this capacity building definitely tailored to each type of company. The second pillar that we have is we have assignments with larger companies, so SMEs and corporates, on advisory on topics related to their strategy, their governance more and more. This is a very common topic that we are covering. And the third pillar is funding. So we ourselves are business angels, having invested in more than 20 companies, debt investment, safe notes, and a couple of equity deals as well. So this is in a nutshell who we are. We have been very lucky to work with a number of companies from different stages of development, from different sectors, and of different types. We have been working with those companies for a number of years now. And the approach that we have is that once we start working with a company, whether through a program or through a one-on-one relationship with them, it's a very long-term relationship where we accompany them throughout their journey of scaling up, of maturing, and of becoming more and more established and closer to the vision that they have. The way we do is that we have our own transformation journey. We share the process. So whether the topic is risk management or crisis management or governance or investment readiness, so we have our processes And then for all of these, each of these processes, we have a set of templates that we share with the companies. We have done this with a number of companies. So we have been lucky to have managed to gather a number of case studies. So not only we show the templates, but we show the templates that have been actually filled in a real life example by clients of ours. Our also value add would be in leveraging our network. So we love to make connections, whether it's facilitating access to market or access to talent or access to partnerships, so that we provide a holistic support for the organizations that we work with. And as I mentioned, there's a lot of follow-up. So we maintain this relationship. We continue supporting those organizations post-program, post-assignment with regular meetings with their management, with the board, to continue walking through this journey with them. This is the transformation framework that we use. I will not go into the details of it yet, but the idea is, for us, it's a journey. We call it transformation, even if we're still at the beginning of the journey. For those that are pre-revenue stage, this still applies to you. This is where we sit with you. We look at what you've done so far. We look at your challenges. We look at and we help you map your growth opportunities. We validate your value proposition. We support you in conducting the competitive analysis and in highlighting your competitive edge. We help you put together the balanced scorecard, which is really the set of KPIs and KSIs that would guide you through your scale-up journey, and translate all of this into a robust financial model, prepare you for investment readiness, your pitch deck, your complete data room. And eventually this usually ends in an investment event or investment brokerage activities where we help you meet investors and raise or close your funding gap. And the cherry on top of all this is governance. So we help instill the foundations of governance even at a very early stage. Be it with a board of advisors, not necessarily board of directors, or with the processes that you need to have in place, the frameworks that you need to abide by in order to conduct this journey. A few words about myself just before I present Constantin. I have 20 years of experience working with organizations on the topics of risk management and management consultancy, basically, so strategic advisory and financial advisory. I hold an MBA from the London Business School. I hold the CFA as well, and really, what keeps me doing what I do with a large smile, despite all the difficult circumstances, is this ability to support, to help organizations, to use what I've learned, what I've learned academically, what I've learned on the job, to support organizations that are being set up, and especially those that have an impact on the communities they operate with, on the environment, on the culture, on the economy. So happy to be part of the impact that the organizations like yours are generating. I will pause and pass on to Constantin for a short intro.
Look, I thank you, Lama. I have very little to add to what Lama had said. Maybe the key message behind it is all crises have a beginning and have an end. What we're going to share with you is some of the templates that we use with the boards of different organizations, being them scale-ups or being them mature organization. And at the end, it's the question is how much of it applies to your own organization. This is why the one-on-one sessions are probably the most important in terms of value added to you. We are sitting on the board of more than 10 of those companies across the region, some of them in Dubai, some of them in Africa, some of them in Lebanon, on it. And we would love to sit down with you, for those who are interested, and then take those templates and see how to adapt it to your organization, to your own situation, so that you take the right decisions in managing this crisis, because this crisis will have an end. And this crisis have at the same time risk element, but at the same time they have opportunities. And it's important to keep the focus on those risk areas and how to mitigate against them. But it's equally important to keep also a look at what are the opportunities that could come up from either partnerships or a different business model or a different growth opportunities that you have not thought of. So we look forward. You're in good hands with Lama. For those who are interested, happy to discuss with you one-on-one after, over the next 2 to 3 weeks behind it. I hope that you will take as much of the learning as possible from this. Lama, floor is yours. Thank you.
Thank you, Constantin. Let me introduce quickly the crisis management framework. In view of the time that we have today, we might not be able to go in details into all of those components. Again, prices apply differently to different companies, depending on where they are, depending on the sector, depending on the stage of development. As I said, you are a diverse group, so we'll try to make it as much as possible relevant to all of you. The crisis management framework that we usually follow starts with risk management. This is something that ideally should be done even before the crisis hits. But even today, we're encouraging organizations that we're supporting to put together the risk management framework, or to ensure that it's updated. The benefit of having this is that we need to have a view of all the list of all the risks listed, so we know what can go wrong. We all obviously have set our vision, our target for this year and for the next 3 to 5 years. We need to know what can go wrong and what can deter us from achieving this vision, those plans that we have put in place. And the more early on we do this, the more time we have to implement those mitigation actions that will either reduce the probability of those risks taking place within the context, or reduce the impact of those risks on the company. The second component of crisis management framework is cash flow management. It's really at this stage all about cash flow. Your cash flow position, how much can you optimize your cash flow in terms of inflows, outflows? How do you prioritize? How do you implement cost optimization? How do you revisit your capex investment plans and reprioritize based on the current circumstances? So we will touch a bit on that. The other major component is that for some of you who have started their operations, who are generating revenues, you must have put together your budget for 2026. And usually when we are putting in place a budget, we encourage companies to put the list of assumptions that underlie the budget and the risks that could make these assumptions deviate from the levels that we have put for them. So this is one thing to keep in mind. The second thing is, whenever you are doing the budget, it's very important to do a scenario analysis. So today we have the budget that was set at the beginning of the year for 2026, or at the end of last year for 2026. But today it's a different context that we are fighting within. So what is the revised forecast that we have, and what could be the worst case scenario that we might be facing and that we need to prepare for ahead of time? So this is on sensitivity and scenario analysis that we have to do. A sensitivity related to the assumptions that we have put into the financial model that generated our budget and financial plan for this year and the year after, and what types of scenarios we might be facing taking into account what's happening. So the crisis might be longer than expected, and if that's the case, what will happen? The crisis might worsen, and in that case, what would happen? So we need to see a simulation on all those scenarios on the company. The next element, and this is something that few of us think of, because whenever we are in crisis mode, it's really all about firefighting and trying to remain in business, remain afloat, make the payments that are due, and so on. And we tend to overlook the fact that with every crisis, there's an opportunity. There's the danger, of course, that comes with the crisis, but there's also the opportunity element. And this is where, whether we have done it before or not, we need to do it. And this is the mapping of growth opportunities. For companies that have done it in the past and enter the crisis with an already existing growth opportunity mapping, it becomes a matter of prioritization. So there might be opportunities that have been highlighted in the past and before the crisis even began, and then we take another look at those growth opportunities, and we see which one of those might have gained importance, gained relevance, and this is where we reprioritize. And if we haven't done the exercise before, it is very important to do it today. We just finished a call with 10 companies that are part of one of the programs that we're managing. And many of them have actually pivoted from their initial plans, grabbing growth opportunities that have been available because of the crisis or thanks to the crisis. And they are pursuing those opportunities that in the past were not part of their strategy, were not part of their immediate priorities, but have now turned into a possibility, and they seized that opportunity, and it's helping them diversify their revenue, provide them additional revenue streams to weather the crisis. The next element is stakeholder mapping and communication. During crisis, the most important thing is to maintain the right level of communication, internal and external. And so a mapping of stakeholders, whether these are employees, these are partners, these are suppliers, clients, regulators, investors, we need to do the mapping of those stakeholders, and we need to put in place a communication plan for all of those, or for each of those stakeholders, so that during the crisis, we know how to address them, how to share with them the developments that are taking place, so that we use communication in a way to help our case, to get the support that we need, and to give the assurances that we need to give at the same time. The last point is emergency funds. This is the time where we tap into them. So ideally, we should start putting in place an emergency fund, a cash buffer to weather crises such as the one that we're passing through. And this is the time where we can tap into these emergency funds to get the help needed in terms of funding. I will stop at this stage to see if you would like to have any questions before I continue. I will choose some of the slides that we would like to share with you, but if it's possible for you to share questions, comments on this before I continue, this will make it even more relevant for you and more interactive for all of us. The floor is yours.
I just want to say this is really relevant since the recent event for us, things have been changing. So I know maybe we'll have time to go in details, but things are really changing. So I'm just looking forward. So cash flow management, we have an investor who's on hold. Our old market strategy is changing. So I'm all here this morning. So I think it makes sense.
Thank you, Alpi. Any other comments or questions at this stage? Who are the companies, by a show of hands, if you can, who are the companies that have been, range from 1 to 5, who would say that the crisis has affected them a 5? Very severe impact that they've been noticing from this crisis. So LP, for those that have not responded, so can some of you, yes, please, Abed. It's a 5 for you.
5 what? Sorry.
So how has the crisis impacted your operations? So
We have an increase in costs while we already have contracts that we abided by costs for food, for example. The packaging doubled, the price of raw materials increased, the fuel increased, while we have distribution contracts and food contracts, and now we're operating at losses and we cannot do anything about it.
how long have you been operating, Abed, before the crisis hit? How long have you been in business?
4 to 5 years.
Okay. And your markets are, where are you located?
Dubai.
And you operate across the GCC? Is it Dubai? Is it more
UAE
regional?
only.
Okay. Okay. Thank you, Abed, for sharing. Anyone would like to also share a bit how the crisis has been, how have you been feeling the crisis on your operations, on your income statement, on your cash flow position, on your projects overall? Yes.
Yeah, so Reflex, we're a marketplace for oil and gas equipment. We've had just a bit of a slowdown, really. So obviously the industry, a lot of sites have been shut down temporarily. So there's been a bit of a slowdown in people, trying to sell equipment or procure new stuff right now. But we think there's probably going to be a big uptick as soon as things settle down a bit more. And people are going to be looking at sort of alternate routes to supply the equipment and things such as that. But there hasn't been a major impact. The daily operations are still going, but just a bit of a slowdown and postponement of things. Nothing's been like outright cancelled, but mainly just a bit of a slowdown.
Are the pressures on your cash flow position, Alistair, weighing heavy? Do you have an emergency fund that you can tap into? Can you tell us a bit about your cash flow position?
From that side, we're all okay. Our repeat customers are coming back to more sort of expanding our customer base and new logos that's slowed down slightly or just been postponed because the concept I get is most people at the moment are just trying to do their normal job, like work within the confined parameters they normally would.
Yes.
Rather than take on new projects, onboard new, processes and concepts and suppliers and things like that. So yeah, that's what we're seeing. But we are also seeing a big, increase in traffic on the website for like emergency quotations on certain items. But yeah, that's really it. There's not been a significant deficit. It's just the expansion of new projects.
I understand. Have you done some simulations, Alistair, in terms of some sensitivity analysis? If this takes more time than expected, what would be the impact? If prices don't adjust as quickly, what would be? Have you done some sort of simulation?
Not yet. No, not yet.
Okay. Okay, great. Thank you for sharing again. Maybe what I will do is I will share some of the templates that we have. We might not have the time to cover all of them, but we'll cover surely the most important ones. So why does it matter to have a risk management framework, even and especially in the crisis of in the context of crisis management, is that we need to know what the risks are, to know what the mitigation actions are, so that we activate those mitigations actions to reduce the likelihood and the impact of the risks that we have, that we are facing. This is an example of a risk management framework. So This is where we list all the risks. Usually we categorize risk. So you have risk related to regulatory framework, risk that are related to the macroeconomic context or geopolitical context, things that risks that are operational, risks that are strategic, risks that are financial. So you do a laundry list of those risks, and typically you assign for each one of those risks a score related to the likelihood of this risk taking place and the impact. Should it take place, what would be the impact on the company, on the operations that you have? And based on the scores on impact and probability, you would get a risk level, a risk score. And those that would have been ranked highest are the ones that really need to be taking time of your time and attention from you. So, and these are the risks that you need to spend time on addressing through mitigation actions. So within the framework, for each risk that you have, especially for those that have ranked high, we need to list the risk mitigation actions that we have for them, either reducing the likelihood or reducing the impact, or both. And for each one of those risk mitigation actions, we need to have one owner and a clear time frame. So let's say one of the risks is the ownership of the CEO, and this needs to be tackled within, before the end of Q2 2026, so that if the crisis continues and this risk becomes more important, then it gets mitigated on time. This is an example that is filled by one of the companies that we work with. So this is what I was saying, that you can categorize the risks. For you to structure the way you're doing it, you can categorize them by topics. So the first set is strategy and financial risks. The second one is organizational and HR. The second is operating risks. So cybersecurity, as an example, internet disruption, traffic congestion delays that are affecting. So this is a company that is in the, this is a company which offer a two-wheeler transport, electric bikes. So this is for transportation in one of the emerging countries in Africa that they operate, and they have been scaling. They are based in the UAE. Their head office is the UAE, but they are present now in a number of countries in Africa, and soon will be moving and expanding to Latin America as well. So we help them put together those risk management framework, probability, impact, the risk score that will be generated, a list of mitigation actions, the timeline, and the owner for each of them. Ideally, this needs to be done pre-crisis. If you haven't done so yet, it's never too late to do it. It's a core component of your crisis management framework, is to have in place a risk management framework with the list of risks, with the list of mitigation actions, and with clear ownership and for accountability later on each one of those risks. And this, by the way, applies for a mature organization or an organization that is just starting. So for a startup, early stage, pre-revenue, there's a huge risk related to funding. So the investment round taking more time than expected for it to close, investors losing interest. Now investors have halted all their investment decisions and investments. So this is key even for companies that are at a very early stage, for you to have it, and then it becomes part of your data room as well. So any investor coming to put money in the company will need to know that in your data room you have a robust risk management framework that addresses his concerns, which are your risks, and that are well thought of, and there are mitigation actions that are already being rolled out to address those risks and to de-risk basically the company from the investor's point of view. So this is on risk management. Any questions at this stage? Okay. I mentioned earlier that it's really about cash. So having a clear view on your cash flows, whether it's your cash position, the amount of cash inflows that you're getting, or the amount of cash outflows that you have, ensures that the organization has enough liquidity to survive the disruptions that are brought by the crisis. So that you know that you can meet your obligations, that you can pay your salaries, that you can pay your suppliers, that you can pay the rent and other OPEX that you have, other commitments that you have, and avoid, being insolvent due to the circumstances brought by the crisis. And to ensure proper cash flow management, we look at different aspects. We look at the cost structure. We look at the working capital management, and I'll go into this in a bit. And we look at investment reprioritization. So what you expect to have, especially during times of crisis, is a monthly cash flow forecast. And this is the one that is prepared for the crisis or in view of the crisis. So this is another version than the one that you have in your financial model. This is the one that you have re-looked at, revisited in light of the circumstances of the crisis, from how revenues are affected, from how operating expenses are affected, from how your whole cost structure is affected, and also your working capital in terms of delays of repayments of your receivables, or stricter or more stringent terms from your suppliers affecting your payables. So all of this needs to be reflected into the cash flow, in addition, of course, to your investing activities. So the CapEx movements that you have, the machines, the software, the equipment that you had planned that might not take place, or that on the opposite, now you need more than ever to be able to sustain. So you need to reflect all this into a cash flow forecast on a monthly basis, and this needs to be reviewed at the end of every month to see the deviation that you have seen from the initial plan or the initial forecast, and how will this affect your cash balance for the end of the period. Let me ask you, who also by a show of hands, who have done a cash flow forecast that they are monitoring closely? Okay. So this is, yes, Sari. Sari, can you tell us a bit, how do you do it? Do you do it this way? Is it different? And what is the benefit that you've seen from having it?
Hi, together. So, in terms of the business model which we have, we are more fintech and healthcare, so we don't really have, let's say, operational expenses such as supplies, etc. But what we have been doing is technically exact the same thing what you're showing here. So we have a forecast for the full year, based on the volumes which are coming in the sales. We then understand what are the gross profit, the gross revenue, and then to go down into the net. And then based on the expenses, we then as well understand how the forecast of the impact of sales will be, the impact on the cost which we have, and on the reserves which we then have. So we do closely do this by end of the month, first week of the month, first week of the next month. It is reported by our department and being reviewed internally. So it is quite a similar sheet.
Okay. And Sadi, has there been deviations from the forecast that are, impactful ones?
Honestly, not until now. So we are because we are more in healthcare and in clinics, so in volumes and sales, which are the patient volume coming to the clinic and the transactions they're doing, we did not see, surprisingly, a change of volume in March and in Feb compared to the last month. This could be the impact because we have a spread of portfolio of clinics, so it's not only specific to a specific specialty. So it's recurring treatments which still have to be done technically. But though we are expecting in the next quarter to have a drop. We are expecting this for the first reason is that in usual this summer times the expats and the people they leave the UAE for a short time because of the school vacations, etc. And now because of this situation, we have calculated another factor on top of it, where we are assuming that there will be a drop, but not a significant drop for now.
Okay, this is very good to hear. Thank you, Sadi, for sharing.
Thank
Yumi?
you.
Yeah, I have two questions. So we have a similar form that we're using for the cash flow management, and the one line that we have addition to this is the runway. So I wonder how you track the runway, because in for example in our documents we have the runway like in the bottom. So, or is there a better way to manage it? That's my first question, and the second one is in terms of the tax or anything that after all the income and outcome comes and then calculated tax, do you use this form to actually add the tax as an expense at the end? Because it looks like an operation expense does not include the tax. So I wonder how the tax is located within this form.
Yeah.
Thank you.
Thank you, Yumi. On the second question, taxes are part of operating expenses in that example. I mean, this is a form, and you can tailor it to it's one company, right? So it will not have the same operating model that all companies have. So yes, absolutely, you're right. The tax needs to be here because as long as you're paying it and it's affecting your cash position, then definitely it should be there. In this example, it is part of operating expenses that we have included. For the first question on runway, absolutely. You need to know. So here we're showing only the cash balance at the end of the period, but we need to know what amount this represents. So if our runway is $1 million, then we have a problem. So this is in absolute terms. It needs to be coupled, as you said, with an indication of what is the runway that we have and how well are we positioned to withstand this. So absolutely, I mean, there's no one model fits all. It's you will have even on the internet you will have 1,000 of models for cash flow. The important message is that it needs one to be part of your financial management tools. So not only looking at your profitability, but looking at your cash flow forecast is a must. It needs to be integrated within the planning, so it needs to feed into it needs to feed from your income statement, from your projections on the balance sheet, so that you ensure that you include any cash inflow or cash outflow and what is the impact of that on your cash position and how much is this cash position sustainable for you to continue operating, to meet your future needs and so on. So yes, thank you, Yumi, for your questions. I hope I answered well. Okay, any other comments on the topic of cash flow forecasting? Okay, then we can move to, cash flow optimization. So the way we see cash flow, and you can well see it in the cash flow forecast. So what is affecting your cash position? One, of course, is the revenue stream, which we're not mentioning here, and revenue is obviously led by demand, by the pricing strategy that you have defined. So this is one, and this is a topic that it's on business development, it's on customer relationship, maintaining the customer relationship that you have, being close to your customers, and we'll focus a bit on this on the communication plan that you have. So this is revenue line that is kept aside. Now we're looking at the three other components. One is cost optimization. Two is the working capital optimization, and three is investment prioritization. So on cost optimization, And here, maybe let me show you a laundry list of recovery actions, and then we will see where they fit into that. So when talking, and these 2 weeks alone, we have been having different calls with different organizations. All of them, the topic has been crisis management, and the discussion points were, what are the recovery actions that you have taken? So freezing non-essential spending immediately is the most recurrent action that is being implemented. Building a 13-week cash flow model and tracking it weekly is another thing. Trying to renegotiate terms with suppliers so that you improve your payables, you delay your payables to give you a bit more room to manage your existing cash, and try to negotiate terms with those suppliers without at the same time affecting the suppliers, because everybody is in this crisis together. But trying to negotiate a win-win terms with the suppliers is also one key action. This is directly related to your working capital management and optimization. Acceleration of collections, even if you have to offer bundles of prepayments, giving discounts, but to try to accelerate collections and reduce your days sales outstanding, also to improve your working capital cycle. Cutting discretionary expenses, marketing, travel, consultants, and others. Pausing the hiring process, and implementing a hire freeze. Identifying quick win cost reductions on very, this, I mean, we can give a number of examples, but within the operations that you have, what are the quick win cost reduction, whether it's related to rent, whether it's related to transport, whether it's related to energy. So what could be those quick wins that you can implement? Reviewing the workforce structure. So taking temporary measures. We've seen companies that have been given paying 60% of salaries for 3 days a week of attendance. We've seen companies that have offered a renegotiated agreement whereby we pay you 70% or 60% of your salary now, but give us time and we will pay the remaining 30-40% once the situation stabilizes and we have a better view on our cash position. And this depends on the different ranks within the company. So you need to tailor this based on your organization structure. Renegotiating debt terms. I don't know how many of you have already taken loans or convertible debt that is paying interest. So renegotiating debt terms is also another thing that we've seen companies do to delay the debt repayment or to freeze interest accruing until the situation clears. Rental agreements, renegotiating those agreements with your landlords, renegotiating leases, pausing underperforming units. Now, for some of you, this might be more relevant than others, depending on your stage of growth. Simplifying the product or the service offering. So some products have simply become irrelevant today. Some services have become irrelevant. So simplifying the offering is also something that you can consider as a recovery action. Adapting pricing and adapting payment terms. So this is on one side, the working capital management, and on the other side, on your pricing strategy and on how it's affecting your top line. Repricing services to reflect the new cost realities, at the same time maintaining the keeping in mind the customer relationship. One of the companies that we spoke to today said we have to increase costs, but to increase the fees that we are taking, because our cost structure is not comparable to what it used to be, but at the same time we cannot do it. So we will have to absorb the cost ourselves for the time being, because we are afraid that this will affect the customer relationship that we have. What else? Asset sales. So this is a more severe action, but some companies will have to eventually. We work with a company that is in transport, and they are considering selling some of the fleet that they have. And we know another company is actually interested in buying the fleet of the other company because of the different cash flow positions that each of those two competitors have. And finally, raising funds. So if we don't have enough sufficient funds to weather the crisis, we need to see whether we can access funding, short-term funding, to at least bridge the gap that we have now. Any questions, comments, other recovery actions that you have implemented, that you are thinking of implementing, that we haven't listed here, that you would like to share with us, by all means. Jessica, tell me if you wanted to do the
Yes.
picture now.
Please, if we can just open our camera so we can take a picture for LinkedIn. يا عم شفت وشكن ما أهضمكن. You look so cute, all of you.
Even me, Jessica.
Even you. You're the cutest, يا رما. Tushkaruba, can you please open your cameras?
We should have asked this from the beginning, Jessica.
We wanted to see who's staying for the end. Checking.
No, I meant the camera so that we see faces. Good to see you,
Exactly.
everyone. Meanwhile, while Jessica does.
Wait, I will tell you one, two,
she has
three.
to do.
Fatma will take the picture. Everyone is smiling. Done. Thank you.
Thank you,
Zed
Jessica.
هلا طلع خلص. We're gonna take another picture because Zed just came.
Sorry about that.
Sultan is saying his camera is not working. He apologizes to all of you.
Okay. Done. Thank you.
Thanks,
Let's-
Jessica. So
let's
some
keep them
comments on
on.
the recovery actions that we have listed. Can you just provide a brief comment? Do they seem relevant to you? Are there other actions that you have been thinking of that we haven't included that you would like to share? Jessica, the question applies to you as well, no?
For me
as program
كمان.
manager.
Me too.
I mean, we're all in business, no?
Yes, you are all in this.
LP, go ahead.
Yeah. So what we decided to do, because we were starting commercialization in the UAE in April at a health conference, but everything's been canceled or delayed, and it's a big question mark when it's going to happen. So now we're looking at changing market, and most probably the US, and we're looking to do like a Kickstarter campaign. So that would hopefully generate some non-dilutive fund that would help. So that's one thing we're looking at.
Was moving to the US part of your plans, part of your growth opportunities? Give us a bit of background.
It was the long-term goal because it's the biggest market in terms of healthcare, but it was making much more sense. It was much easier for us to start in the UAE where we already have regulatory approval, grow here, and then it would make the entry to the US much easier. But it's really a blur for the next 6 months in the UAE, what's happening, and yeah, so we can't plan anything for the next 6 months at least. So
Amazing. That brings me to the investment reprioritization. So for those of you who are familiar, let me jump a bit here and then I'll show you. So for those of you who are familiar with the Ansoff matrix, this is the framework that we use to map growth opportunities. And this is something that we usually do, I mean, outside the premises of a crisis. in preparation. So this is part of the strategic thinking that we encourage organization to engage in. And this is, I mean, the first quadrant is about market penetration. How do you increase your market share in your existing markets of presence, targeting your existing audience. The second is how can you introduce new products to that same audience in those same markets where you are, but increasing your product offering or service offering to them. The third quadrant is market development. So how can you go to new markets? Either like LP going to the US as a new market, or going after another customer segment that had not been part of your audiences until now. And the fourth one is diversification. So this is the Ansoff matrix for growth opportunity mapping. And at the end of this comes so the way we do it, let me show you just quickly one example. So this is how we list, for example, for market penetration, what are the different opportunities that we have? For example, increasing number of drivers under the subscription model, gaining market share by acquiring small players, consider entering into joint venture. So these are examples of growth opportunities. And what we do after this is we prioritize them. And typically, I mean, this is one way of doing the prioritization is based on the funding required, the financial return that we expect to generate out of them, how strategically aligned with what we want to do with our long-term vision, with our markets of preference, and so on, the risk of execution, and the impact if we're considering ESG impact as well. And based on the ranking of or the scoring of across those dimensions, we would have a decision whether to go, whether to pilot, whether to hold, or whether it's a no-go. And during crisis, having done this homework before gives us a clear view of, okay, what can we do now? So having a list of those growth opportunities, we during the crisis, we come back to them and we say, okay, maybe this now makes more sense. And this is exactly what LP just mentioned, which is investment prioritization. So today, this growth opportunity one, which might have been before a hold or a pilot, becomes now the one that is that makes more sense to engage in and to pursue. Does that make sense, LP? This was a bit your thinking process behind it.
Yep.
What else? So we mentioned scenario analysis. So usually this is the budget. So this is the budget guidelines for 2026. You have the KPIs, you have the targets, you have the key value drivers behind them. And then here is the most important thing is the critical assumptions or risks. And it's important to have listed those assumptions because in times of crisis, specifically, this is what will happen. We will know we will actually fall into those risks that we had highlighted, and the assumptions that have been underlying the financial model and the budget for this year won't make sense anymore. So what we do is we do a base and the worst case scenario. So this is the base case scenario with the different assumptions and the impact on the P&L. And this is the worst case scenario for the same company. What would 2026 look like under both the base case and the worst case scenario? This is for scenario analysis. For sensitivity analysis, we put our assumptions into the financial model. What we need to do as an extra step is to do sensitivity. So what if our operating cost is 10% more than what we have budgeted? What would be the impact on EBITDA, on your operating income? And what if the revenues are 10% less than we had estimated? So instead of reaching a budget of 8 million, 7.9 million, we would actually be in a loss of 2.9 million. And this is where sensitivity analysis is very important to keep track of, what can go wrong. And if it did go wrong as it is now, what would be the impact on your EBITDA and also on your cash flow? So this is very important to do. For those of you who haven't done so, we really encourage you to do this scenario analysis because we don't know, as you just mentioned, rightly, we don't know how long the crisis will continue. We don't know the impact it will have on the financials. So we need to put this into numbers and see whether we can still withstand if this worst case scenario were to materialize. Hopefully not, but if it were to happen, what can we withstand such a crisis, and what do we need to do now to avoid the impact it might have. LP?
Yeah, I have a question. It's not directly related to that, but I'm wondering, so high level, what we do is cancer screening. Right now, health department, like everyone's working remote, so everything is slow. The conference is canceled. But people are still getting sick, you know, and I wrote to them I saw an opportunity. I said, yes, everyone is home, but people are still gonna get cancer. And during COVID, a lot of cancer went undiagnosed on screen. So for us, it's an opportunity. I pitch it, but I'm not receiving any, and that's an issue sometimes with the government. They just don't respond. So to what level should I, you know, there's a crisis. So I don't want to make money out of the crisis necessarily, but you know, how much should I push versus, you know what, let them deal with what's going on and let me focus on another market. Like we're sort of hesitating, like we're not quitting. I don't know. Do you have any recommendation as far as like the human aspect of it?
Would love to discuss this more on a one-on-one, LP, and we'd be happy to do so. So we take a bit more of a background I mean, we need to know what kind of relationship you have with them, what kind of track records you have, what is their agenda, and what is making them, you know, hesitate between this. What other projects are they prioritizing over this?
Okay.
To give you
Well, I
a
already
decent
asked
answer.
Fatima to schedule a one-on-one with you guys, so I guess we'll have that opportunity.
Would love that. Looking forward. The very last comment, I know we ran out of time. The very last comment is on communication, and I touched upon this at the beginning. The key message is say it first, say it completely, say it yourself, and say it consistently. Whether it is to your employees, whether it is to your customers, whether it is to your suppliers, your shareholders, the media, the public, regular authorities, and of course to you know, to your team. But it's very important. I mean, don't underestimate the importance of communication, especially during crisis, to ensure customer retention, to ensure employee retention, and do the mapping, because you need to understand how to address each category of stakeholders. So who are those that have the highest influence? Who are the ones that just need to be informed? Who are the ones that need to be actively engaged throughout the crisis development? So do this kind of stakeholder mapping and tailor your communication to the mapping that you would have conducted. There's you know, the channels, you know them. It's important to provide updates and to provide a post-crisis communication to tell all your stakeholders what has happened to the company at the end of this crisis. What were the measures taken? What were the what the impact was, and how are you getting out of the crisis? And what matters to them. So for your customers, they don't really care about I don't know how profitable you were or your losses, but they need to know that you will continue to maintain the service and product delivery. For your shareholders, you need to provide them a transparent view on your performance, on the lessons learned from the crisis, on the improvements that you will have introduced to your processes, to your frameworks, and so on. So do the mapping, tailor your communication message to different stakeholders as they need, and with the information that they need. And make sure that you wrap it up at the end of your crisis with a transparent view for everyone to remain engaged and loyal to the company and to you as a team. I will pause here. I thank you all for your attention. Please, I have time, so if you would like to stay and ask any questions, please do. Any comments, any questions at all?
No, Lama, in general, no questions. I just want to appreciate your time and say thank you because I've been in a few sessions similar to this, and this was the most productive, on point, executional wise, interesting session because it was not very much of a high level talks. It was really more on, examples and how to do it and what exactly to do and how to think of the, like the part which you just said that the end is important as well because every crisis has an end and then you will rise again in a way and then it's important how did you deal with it. So if you think of from now on what you want to reply in 12 months time, what did you change and what did you do? This is as well an important core thing to think of from now. So appreciated your time. Well done.
Thank you very much, Sadia. Thank you. Great. It was a pleasure. Looking forward to having catch-ups with you if you would like to. Jessica, thank you again to you and Fatima.
Thank you.
And
Thank you,
we
Constantin.
stay in touch.
Sure.
Thank you, ladies. Thank you all. And good luck.
Thank you.
Thanks, everyone.
Bye.
Thank you. Good luck.